Hi, this is Skyler Weinand with Regan Capital. We're pleased to present part two in a series that talks about positioning a portfolio for potentially higher interest rates and a steepening of the yield curve. Here, we'll review the underwriting of agency interest-only bonds. $20 million tranche at $7.50. The underlying borrowers are paying 2.43%. So think about how low rates would have to go for them to want to refi. Pretty dang low, under 2. So we invested about 1.5 million. Our base case here is these loans paying, this is hieroglyphics to most what this says here, but the borrower is paying 6% annualized prepayments for the first 6 months. That goes up to 25 over a 2-year time frame, and it levels out at 15. And that's a 9% yield. It's okay. Upside is if that borrower doesn't really peak out at a 25 CPR, but they peak out at about a 15. Downside is that they peak out at about 40 CPR and stay there for life. That means that basically all the borrowers pay off within the next 2.5 years. Okay, and instead of looking at yield, what's really important on this is to look at ROI, return on investment, over the life of the holding. Base case ROI is 1.4%, 143%. Okay, upside ROI is 200%, i.e., doubling your money. In our downside scenario, you still get 79% of your money back. So point being, our downside is 20%. Our upside is over 100%. That's a 5-to-1 asymmetrical trade. Now, if rates were to rise just that to 1.5% by the end of next year, and we sell it roughly where we bought it at the same spread, that price rises from $7.50 up to over $11. Okay. We invested 1.5. We sell it for 2.4 million, $900,000 gain. Holding period return of about 59%. So you can see here the tremendous amount of upside of having a small position in this type of security. This is about 4 to 5% of our book. But we're also actively trading these securities. In the fourth quarter of last year, we traded 37 of these bonds, almost half of which were riskless. We're buying and selling these in the same day. Our average holding period on these positions was all of 4 days. The maximum amount of cash we deployed was a little over 7 million, but the average cash we deployed was only $1.3 million. So on a $1.3 million invested average cash, we made $964,000. Return on investment of about 73%, average hold period of 4, annualized return is obviously silly at like 6,300%. But total buys and sells upwards of about $90 million with only a little over $1.3 million invested.